In today's episode, we are speaking to Jeff Clark. Jeff is someone I affectionately call the Gold Buddha because he's an individual that has done exceptionally well in the gold and silver mining stocks. I believe when we spoke last year, he had ended up the year 2020 somewhere around 300% returns. And so he's also one of the head writers, researchers that's involved in Mike Maloney's goldsilver.com. So also just a fantastic gold and silver and macroeconomic commentator. So we're going to be discussing inflation, gold, silver. He's going to be giving away his number one mining stock pick for 2021. As I said earlier, last year he had quite the year. So I think we'll end up with a great pick. And so thanks for watching today's episode. Make sure you hit the like button on this video. Give us a comment down below to help send this out into the YouTube universe so more people see this video. You can comment down below, Jeff rules or go gold go. And as always, just want to say a quick thank you to our channel sponsor today, which is Vizsla Silver. Vizsla Silver has been one of my favorite and best silver mining stocks this year. It's Vizsla Silver. And so thank you for being our sponsor. And nice to see you, Jeff.
It's great to be back with you, Jake. I've missed you, buddy. So it's good to be here.
Yeah, it's good to see you again. Okay, so Jeff, here's what I've been wondering, right? You've been studying gold and silver, your entire life. And now also you do it professionally, not only as a mining stock investor that's done exceptionally well, but also with your involvement with gold and silver.com with Mike Maloney's company. You're one of the top thinkers involved in that, really spectacular group. And so you've been studying these subjects for a while, and now we're finally starting to see that inflation that before maybe was the boogeyman, maybe before it was the conspiracy theory that never happens. And it's those crazy kooks that don't like the Federal Reserve, but they've always been wrong. It's never happened before. Well, now we're seeing it. And so I wonder, is the great currency devaluation finally upon us?
That's a great question. I think it's been upon us. We've seen massive dilution of our currency for, how many years? At least since 2008, since the great financial crisis, right? But a lot of that dilution ended up, all that currency creation ended up going into asset prices, right? Into stocks, into real estate. And those things have really exploded in value, right? In price. So that's where a lot of it's going. But what's happening now is that not only is that pace picking up in light of the pandemic, but now we're going to see fiscal injections. And fiscal injections are different than monetary debasement. Fiscal is where they're just going to create currency and they're just going to inject it directly into the economy. That's very different because that's going to go right into products, wages, supply chains, etc., in order to rebuild infrastructure and all these things that he has planned. So that hasn't even started yet. So all the inflation we've had, the fiscal injections haven't even taken place yet. That's still in the future. They're not agreeing on it. They're pretty far apart still. But it's safe to assume there's going to be some level of fiscal injection, probably on the $1 trillion level, maybe $2 trillion level. Democrats want 2.5, Republicans want half. So it's going to be somewhere in between there. And again, that is going to lead to even greater inflation than what we've had so far. So, the monetary debasement is a real trend, and it's going to impact you whether you see it or feel it or not. And you know what? I got to give you another example. There's a new Alzheimer's drug that is just coming out. It just got approved. I can't give you the name of it. I don't remember. But the cost of this drug is somewhere in the range of $54,000, $55,000 per person per year.
Wow.
If you add up all the people that have Alzheimer's times $55,000 per year, it's $500 billion.
Wow.
So they're talking about, $500 billion, the Republicans are, for infrastructure. There's another $500 billion. Where's that going to come from? Most people that have Alzheimer's are on Medicare, Medicaid, et cetera, right? So that's taxpayer funded. So on top of all this other thing we're talking about, there's just one other small example. That's just one of many examples where the budget isn't going to work. There's going to have to be more and more currency creation just to meet the Alzheimer's demand for this drug. So we're getting hit from multiple angles, not just, currency creation, not just fiscal injections, not just Alzheimer's. It's going to come from multiple directions. And this trend is really just getting started. It's going to get worse. And of course, what that means is you're going to lose purchasing power, and gold and silver are going to have to rise. That's it right there. And so that's the trend I'm playing. I think that's built in, it's locked in, and it's only going to get worse.
So when you say fiscal injections, this would be referring to infrastructure packages, direct payments to citizens, those types of things, which you're saying are in the infancy stage in terms of our quote unquote recovery after the global economic shutdown, that they'll resort more to fiscal injections, infrastructure bills, you said in the early stages. So maybe over the next decade as governments are moving forward.
Right, it hasn't happened yet. They haven't agreed
Correct.
on a bill, and when they do, and then they begin to inject, that's going to be currency that they have to create because they can't balance their budget, right? $1 trillion deficit spending right now. So they have to create it, and they're going to inject it directly into the economy. It's going to right into wages. It's going to go right into product purchases to rebuild roads and bridges or whatever, plus all the other laundry list of things they have in these bills, whatever they agree on. That has yet to happen. So that's going to be inflationary. And of course, if it goes into wages, there's a lot of economists out there that think, look, you can't have inflation without higher wages. That's their theory. And to a large extent, that's true. Well, this could be the catalyst for higher wages, right? That's just one way we could see higher wages. So I think that's coming. I think inflation is going to go higher. But as far as this debate on whether it's transitory or not, here's how I look at it. I think, first of all, it's not going to be transitory. The CPI was 1.6, pardon me, I think in January, Jake, and
One
it's like
in
five
January
now.
of 2021, you're saying?
Yes, just 5 months ago. It
Okay.
was below 2%. And we're at almost what, five now. Do you really believe that the CPI is going to go back below 2%? I mean, maybe someday, but not anytime soon. And here's the other thing to consider about Fed speak. When they say it's transitory, it's very possible that what they mean is the rate of growth is transitory, not the actual CPI number. So the CPI could go to, let's say, 6 and then slow down and stay at 6. And that's transitory because the rate of growth slowed down, right?
Interesting.
So I don't know that for a fact. It's hard to get, straight facts from what they say, right? You kind of have to read between the tea leaves. But we could be stuck with elevated inflation, and I don't mean monetary, I mean actual consumer price inflation for years, and it would be transitory because the rate slowed down. So I just don't trust that what they think is going to happen and what they're actually even saying is really what the facts are going to be. But here's the biggest thing of this whole discussion. It doesn't matter. If you own gold, it doesn't matter if I'm right about inflation or if you're right about deflation or stagflation. Stagflation to me seems like a more likely outcome here over the next couple of years than anything else, than strict inflation or strict deflation. All of those scenarios are very supportive for the gold and silver owner. If you have meaningful exposure to physical gold and silver, you're protected. You're protected. You have a wall of defense up that's not going to be penetrated by any of those events. So you could guess inflation and we get deflation. You're wrong, and yet you're right with your investments if you own gold. Because gold will protect you in those environments. It really will. Historically, it has protected against high inflation. It's protected against deflation. It's protected against, stagflation. So whatever inflation we get, it's okay if you own gold.
We're certainly going to get inflation of some form, and it's interesting because in some ways you see the hollowing out of the economy. Yet there's so much more currency units in circulation that even with the economy slowing down, that's when you say, well, then stagflation can come out of it. And when I first started studying, whether it was Mike Maloney or Jim Rickards or whomever it was many years ago, and they talked about this idea of currency essentially becoming worthless, a currency collapse, if you will. And Mike obviously details this greatly in The Hidden Secrets of Money. And I always felt like it logically made sense, but it just won't happen. It just won't happen. And now we're at a point where, because of the lockdowns, the devastation from a supply chain disruption to the amount of people that aren't working and the amount of people that are 12 months behind on their mortgage, 12 months behind on their rent, the amount of people that don't want to work ever again now because they've gotten unemployment money and they don't want to work anymore. Why we're seeing those for hire signs everywhere. So I look at it and I go, whether it's 2 years or 10 years or 15 years, I think we're in the first inning of, as you said, fiscal injections. The only solution they're going to have, whether it's Democrats or Republicans, are going to be infrastructure bills of some sort. And otherwise, they're not going to get their approval ratings. They need to prop this up. And so the answer to what's happening is actually just going to be more currency units. And so
absolutely,
I look at it and I go, is there a point at which this actually does collapse? This is something you've detailed and thought about for many years. What are your thoughts on that? Where the end game to this goes?
Well, I have to be honest. I admit that, years ago, I didn't think, it's not going to be a total collapse. We're not going to have hyperinflation in the US. But in response to the pandemic and just how much currency they've created, and it's not just that, it's deficit spending. Our deficit spending per GDP right now is actually higher now than it was in World War II.
Wow.
It is. Our debt's higher per GDP. You have all this currency creation. So you put those three things together, and that's a toxic formula. That's a perfect storm for higher inflation, loss of purchasing power, greater, higher prices in gold and silver. The Fed has already told us, and other central bankers have already told us exactly how they're going to handle any event. They're going to create currency. They're going to deficit spend. That's going to get added to the debt. That's their formula. And they can talk all they want. Forward guidance is actually a tool of the Fed. And that's just basically talking and saying, well, we think inflation is transitory. That's an example of forward guidance from the Fed. That's a tool that they use and they rely on, is just talking and trying to reassure the markets. But all of this is going to add up to some kind of event that causes either some type of crisis or a complete loss of faith in central bankers, in the Fed, and in government. All I can say, Jake, is that I'm very glad that I have exposure to gold and silver in this environment, because however the crisis plays out, you don't have to necessarily get the details right. As long as you have meaningful exposure in your portfolio to you and your family to gold and silver, history says you will be okay in that environment, and you may even prosper in it.
So let's get into gold. And one of the things that many people have discussed on my show and in general is how gold moves inversely to real rates. And so recently, the Federal Reserve has said, maybe someday, sometime, someplace, somewhere, some destination in the future, we may raise rates. And so people have apparently acted accordingly. My personal hypothesis is they know there's so much currency units in circulation. We know we're not going to get a massive market collapse if they're long term, if they're punching this much money into the system, and maybe they're doing this to try to talk down some of the speculation in the market, so it's kind of a slight correction for a minute, so it's not just constantly straight up forever. And I wonder, do you buy their interest rate talk long term, that they will raise rates? Or do you think that rates will ultimately continue, real rates will continue ultimately more negative over time?
Well, I'm not a trained economist, but that probably means I probably have a better answer than right. So because economists are micro focused, right? They really are. Um, I don't know exactly how this is going to play out. I have my own personal guesses. Again, I go back to the thesis that it doesn't matter. But here's one thing that some of these economists are not talking about, and that is that if this continues at this pace, the Fed would be forced to raise rates by foreign governments, by foreign entities, by the foreign companies and governments that own treasuries, because you can't have negative rates at -2%, -3% indefinitely. Either that has to correct, or they're going to have to raise rates. Now that may not happen this year or next year or whatever, but the Fed saying we're thinking about maybe raising rates 2 years from now. That's it's kind of ridiculous to react to that. That's what the markets did, but I think it's ridiculous. Um, but sooner or later, that has to change. They're going to have to correct that, and foreigners may force them to raise rates. That's when it could get really interesting, because the Fed can't afford to raise rates. Right? Interest on our debt is one of the biggest parts of our budget. Making it bigger when they're already $1 trillion in deficit every year is going to make it worse. And yet they could be forced to do it. That would be a very interesting situation. That could even lead to the beginning of the end for the US dollar. Who knows? There's a lot of ways this could play out. There's a lot of moving variables. But that's a scenario that it's probably going to happen at some point, because again, I fall in the inflation camp or stagflation camp, where there is going to be higher inflation, which means negative rates for a longer period of time.
So let's talk about opportunity. The Chinese symbol for crisis and opportunity is one and the same. We're certainly in the midst of a currency crisis, to the degree of which I guess we won't know for for some time until it plays out. But the reason that I call you the gold Buddha is because you're laser focused on the opportunity of it. I believe it was last year somewhere around 300% returns, and there's you could talk doom and gloom endlessly, and there's a lot that is worth discussing. But at the same time, we need to do the best we can to focus on opportunity, to free ourselves from the system, maintain our own liberties, take care of our friends and family. And there is that incredible type of life changing wealth transfer opportunity in gold and silver. And you've shown specifically in mining stocks. So I call you the gold Buddha because you're basically, the Buddha is like the enlightened, right? You're the gold Buddha because you're enlightened to the opportunity, you're aware of and taking advantage of the opportunity of the wealth transfer in gold and silver and mining stock. So firstly, from a macro, why don't you tell us about this opportunity in crisis during this wealth transfer, and how your medium to do that has been gold, silver, and mining stocks, and why you think that trend is something that will continue.
Well, thank you, Jake. That's nice of you to say that. Yeah, yeah. The old saying: "In every crisis, there is opportunity," and that's really true. A lot of people that were wealthy in the after the Great Depression invested during the Great Depression. During the big sell off. And so, for anyone who's frustrated at they think gold and silver prices should be higher, well, this is your opportunity, because they're likely to be much higher here coming in the future. So uh, I didn't create this opportunity. I'm simply observing it, like many other people have, and starting with Mike Maloney and many others. I didn't create it. I'm just trying to take advantage of and actually protect myself from it. The Fed and other central bankers have created this environment where they're going to basically destroy the currency. You're going to lose purchasing power. What is the best way to profit from that? Well, maybe stocks for a while, real estate for a while, but the biggest beneficiary in the long run, especially when a crisis comes, is going to be gold and silver. So, I along with many others have recognized that, and that's where I want to be, because I think that is where the best opportunity is, not just playing defense but playing offense as well, and trying to capitalize on that, and become part of the new wealthy. That's kind of the idea, and that happens during crisis. That's when you become wealthy, is during bear markets, is during crisis, and how you respond to that. So that's how I've been preparing for it.
Now, talk a little bit about specifically mining stocks. That's been kind of your medium. You've done quite well in that, and you said there's phases when stocks are good, there's phases when real estate is good. And one thing that I wonder about is, while there's so much money being printed into circulation, therefore assets are rising, there are some assets that are not nearly rising as quickly. And I wonder if there's a point at which the amount of liquidity doesn't allow certain assets to continue to rise, because at a certain point, there's not as much of a market. Call it real estate. I got an email from a viewer the other day who said his son bought a house in Houston, Texas for 150 grand, maybe. And the real estate agent wanted them to pay, I believe, 180. So they wanted them to pay over asking to get this house. Well, in a few months since they bought that house for 30, 40 grand over market, about 180, it's about 367 now. And he sent me the Zillow screenshots for it. And I wonder, how does your view of gold and silver being undervalued as an asset class relative to some of the more mainstream instruments factor in?
Well, that's a good question, but a lot of the currency that's been created, a lot of this has already flooded into stocks, has flooded into real estate. I mean, we're all seeing that, right? I don't need to repeat everything that's obvious to everyone. Asset prices are up across the board. Um, the point is, nothing lasts forever. That can't last forever. And those markets have their own dynamics as well, supply and demand and housing, and, prices just get too unaffordable and have to correct, or rates go up. That could force prices down too, right? So they each have their own dynamics. I think in the big picture, the ultimate target of investors is going to be the gold and silver markets, uh, simply because of the nature of the problem being monetary debasement, monetary devaluation, etc. So, uh, are we
So,
still on, Jake?
so give me an idea of why mining stocks are attractive to you then. That's kind of been your niche. So explain the opportunity of mining stocks before we talk about a couple picks.
Yeah, so mining stocks are basically your offense. They're more risky than owning gold and silver, so you want to make sure you own gold and silver first. Make sure you have exposure to that, meaningful exposure, and that you have control of the metal. That's your defense. Your offense is going to be the mining stocks, and if we're right about where gold and silver are going, the point with mining stocks is they provide leverage to the movement in gold and silver. So if gold doubles, gold stocks are likely to triple, quadruple, etc. And some of the juniors in that environment would do 10x. Same with silver. So the opportunity, pardon me, it's higher risk, but that's the opportunity, is that you can create wealth, if we're right about the direction of gold and silver here over the next few years, by investing in mining stocks. So I I I love it. I've been involved in it for a while. Did really well last year. Portfolio is actually back now to where it was in August of 2020. If you remember, that's where the peak was in gold and silver. They really went on a big run back then, um, silver rose 140% in 5 months in 2020, from the bottom there in March to the peak in August. So, and the stocks did a lot better than that. So, but it's interesting that, now the portfolio is actually back to where it was in August, and we haven't even broken out. Um, Gold and silver, once they break out, we're going to be at another big run. So you want to be prepared for that. That's kind of how I've been approaching it. I've been buying a lot.
So that kind of exemplifies 140% in 5 months. That kind of exemplifies the nonlinear movement, especially of silver, and why it can often be a very difficult market for investors to be involved in, because it defies logic and plays with emotion. And then in 5 months, you get a 140% move, and it kind of just happens. And the next thing you know, it's done, and then it's in a place where it's correcting. So that's interesting to note, first of all. Now, for us that aren't as experienced as the reason I have the show is to try to help myself and as many people as possible, make our, we'll call it, make our fortune in this environment. Now, let's start with gold and silver breakout again. When will it break out again, and will it break out again?
Yes, it will break out again. I'm pretty confident of that, just because of the whole macro picture of what we've been talking about, right? At some point, there's going to probably be another breakout. Um, One thing I'll note is that silver, especially, when it breaks through 30, it's probably going to go in a big run. I actually went back all the way into the 70s, and I looked at every spike in silver, um, every single one of them, and I measured them. And the average spike, the average run in silver is 150%. So when it breaks out, it rises on average 150%. And how long that breakout lasts on average is just 7 months.
Wow.
Yeah, on average. Again, that's the average. So that tells you a couple things. First of all, it happens suddenly and violently. So you need to be prepared. You need to be invested before that happens. The other thing is, it doesn't do hardly anything until that breakout comes. This is especially true for silver, right? Because it's just so volatile. So you have to have the emotional fortitude to handle that. Um, and you have to wait until it happens, because that's silver's DNA. It tends to just sit there and do nothing, like now, until it breaks out. And when it breaks out, if you're not on the train, it's probably going to leave without you. You'll pay a lot more and pay higher prices for both silver and stocks if you try to jump on then. So that's what I've been doing, is using this time to accumulate both metals and miners for that next breakout. So when does it happen? Who knows? I think the magic will be silver breaking through 30, and then silver breaking through it to a new all-time high. Uh, June is actually a very weak month. It's one of the weakest months of the year for gold and silver, especially silver. The month
Historically
we're in
speaking.
right now. Yeah. But July, the after the 4th of July holiday, all of a sudden there's a turnaround on average. This is going all the way back to 1975. There's a turnaround in prices, and they reverse. And August and especially September are the strongest months of the year for gold and silver. So could that be it? That might be it. Here's another thing to think about. The uh, two biggest bull markets in gold and silver, right? So you go back to the 1970s, and then the one from 2001 to 2011. In the middle of both of those, there were some big sell-offs, right? And it took, in the 1970s, after the big sell-off in 75, it took about 18 months for it to get back to where it was when it sold off. In the 2001 to 2011 bull market, you had obviously the big sell-off in 2008, right? It took about 18 months for it to get back to where it was before that big sell-off. 18 months. So our sell-off was last August. That hasn't been quite a year. So if the average applied, that would be what, January of 2022. So for me, the next 6 months the fuse has been lit, and we don't know how long that fuse is, but it's not years long. It's probably months long. And so, based on all that data, I've been aggressively buying, both metal and miners. So I'm preparing for that because I do believe that's going to happen.
See, the reason I call you the gold Buddha is because you got all these good factoids. 140% silver, 140% move in 5 months, 150% average in 7 months. And so, having someone like you on is important because it helps us see that it moves nonlinear. And when it moves very, very fast and very, very quick. And before you know it,
Right.
it's made
It,
its move into the
there's
atmosphere.
there's another thing too. I thought you called me the gold Buddha for another reason. And that's because I commented once, well, I'm just kind of taking the market as it comes, right? And I think that's kind of important, that angle, because I'll see a lot of times, especially on Twitter, someone will say, well, I'm not selling silver till it's $500 an ounce, or I'm not selling silver till it's $3,000 an ounce, or something crazy. But here's the thing: you don't get to pick the price, and you don't get to even predetermine what that price would be. You can't say now I'm going to exit it at XYZ price, because the market's going to do what the market's going to do. Manipulation be damned. It's the free market is bigger than the manipulators. The free market will work at some point. Manipulations never last. Okay, but you don't get to pick the price. So, Jake, what if I told you that the peak of the silver price was going to be, let's just say $80? I'm just pulling that out of the air. And the reason it's the peak is not because that's not high enough, but because the gold silver ratio just fell below 20. If the gold silver ratio falls below 20, I'm looking at that. That's our exit point. That's when we'll know when to exit, or at least take a lot of profits, right? It's not going to be a predetermined price. It may end up being, the correct inflation adjusted price, maybe $160 if you're using the CPI, or maybe $300 if you're using John Williams at Shadow Stats, right? But it's not the price. For me, it's going to be the ratio. It's going to be when I can buy the average priced home in the US with 2 or 3 mint cases of Silver Eagles. It's going to be the gold silver ratio falling below 20. Whatever the price is, whether it's 80 or 800, that's going to be the cue to me of what our exit is going to be, and when it's time to move on and buy other undervalued assets, probably including stocks, maybe real estate. We'll see. Whatever's been obliterated. But that's how I look at it, and so that's why I think I'm the gold Buddha.
So gold silver ratio, you think is going to go below 20 ultimately?
Probably yes. The catch is, if it does, this is me. This is my finger, and this is the sell button. All right. If it drops below 20, I'm going to be getting ready.
Okay, understood. So I love all that. That helps. That helps a lot. If you're listening to this episode so far, give us a comment down below. Let us know that you're still with us. Let me know you found this valuable so far. You can comment down below, Jeff Rules, or Go Silver Go right there down below. So let us know you're still with us. Now, let's talk about mining stocks. I said, give me your number one gold or silver mining pick when we were talking before. So what are we looking at, Jeff?
So we want to get an update on First Majestic, probably, right? But if you want to ask me if I was forced, and I say this, with the idea that you should never buy just one mining stock, right? You should never really do that, especially miners. You really can't do that. But if I was forced and I could only buy one gold stock, it would have to be Maple Gold.
Why?
Maple Gold is dramatically undervalued for what the potential is. It's like a 30-cent stock on US exchange. Yet they're sitting on a potentially massive piece of property with highly prospective geology there. Agnico Eagle came in. For those that don't know the story, Agnico came in. They have a joint venture with them. They're spending 18 million over 4 years looking at their properties. When they JV'd with them, they also brought another property and gave half of it to Maple Gold. So there's two properties butted up against each other that are highly prospective up in the Abitibi, where there's known, high grade gold. The Canadian Malartic mine, one of the largest in Canada, is not far away. The grades so far at Maple Gold are actually higher than what they're finding at what they found at Canadian Malartic. They just had a potential game-changing drill report a couple weeks ago. What was it? I have it here. It was 195 meters of 1.2 grams gold. One of the highest, meter lengths and grade hits ever in that area. The next 4 holes they reported all hit mineralization. 2 had visible gold in it. That's a rarity in today's drill results. You don't see that very often. So they're onto something really big there. You have people from Robert Friedland that have come over to the company, from BMO that have come over to the company. Fidelity bought millions and millions of shares. They're heavily involved. The only knock on the stock is they do have a lot of shares outstanding, but just buy more shares then if you want to participate. But here's the real crux of it for me. Based on what they see, and also they have 250,000 meters of drilling results that have not been digitized that they're going to announce soon. That's probably going to grow the resource. That's going to give them tons of other targets to drill. But it's the potential here. It's the prospective nature of this property. The CEO actually believes that this could be not just another gold project, but another gold district. And it could actually be one of the biggest in the world. Now, that's the CEO. So every CEO is going to think their property is great, right? So you have to take everything with a grain of salt. But given the nature of the project, given looking at the geology there, what they found so far, other mines they're surrounded by, if he's right, I mean, we'll be looking at a 10-bagger in the rearview mirror. So, I don't own just one gold stock, but if there's one I had to give you, it would be Maple Gold. So there you go.
Maple Gold, love it. Okay, so now let's kind of wrap up here. Last time you and I spoke, you've always been a big fan of First Majestic, so I guess it's kind of appropriate to talk about them after Maple, because obviously you're essentially talking about two totally different asset classes of mining stocks between the two of them. Now, Keith Neumeyer, CEO of First Majestic, also probably one of the more important spokesperson of gold and silver and mining stocks in general. And so we heard about Maple. Why don't you end up and give us a little wrap up on your views on First Majestic right now? They acquired a new gold mine, and they obviously for a while now have been looking at pretty healthy margins with the price, because they produce so much silver and gold, and prices, especially of silver, have been able to hang on above 20 for quite a while. So what's going on with First Majestic?
So a couple big things there. They did buy the Jarrett Canyon gold mine in Nevada. So it was gold and it was outside of Mexico. So some people didn't like the acquisition because it was the dilution was about 12% of shares outstanding, but it was very accretive because it would grow production by like 30% or more. So this was a very accretive deal. Plus, it gets them outside of Mexico. This was actually one of Eric Sprott's mines. This was in his company. It was private. They bought it, and Eric Sprott bought into First Majestic as well during the transaction. So believe it or not, Eric Sprott owns over 100 mining stocks. I don't know if you knew that. It's like 110 or something like that. He owns a lot. But his biggest personal investment is in First Majestic Silver, an existing silver producer. As excited as he is about all these other companies, he's put in over $500 million into First Majestic Silver. I like that asset. I like that they're diversified a little bit. But the thing is, it still leaves them with high leverage to silver. It depends on who you ask, but anywhere from 52% to 58% of their revenue is going to come from silver. And guess what? That's more than any other major silver producer. So you look at the primary silver industry, those guys have less than 50% of their revenue coming from silver. So First Majestic still has high leverage to the silver price. That's what we want. That's why we're invested. They still have it, even though they bought a gold mine. There are some smaller companies that have higher leverage, but of the major producers, it's First Majestic. So we still get that leverage, right? And here's the other thing: they've already announced there will be more M&A coming. We don't know when, we don't know what it's going to be, but management has told me it's going to be a silver asset. So whatever it is, if it's a producing mine or something that's about to go into production, it's going to be a silver dominant asset. And so that's going to increase the leverage to silver as well. And this is important because when silver moves, I mean, the whole industry will move when precious metals go up, right? But the more revenue you have coming from silver, the greater leverage you have to the silver price. Makes sense, right? And First Majestic on the producer side is going to be one that's going to have the most leverage of the large producers. So I still like that. Now, the other thing we talked about, you remember, was the tax dispute they have, and they went to court with that. Mexican government, basically nullified an agreement they already had with the company on this asset. So it kind of went from bad to worse there, unfortunately. So the company has filed in international court to try to get this resolved. That was a few months ago. Nothing's really happened since then. Going to international court means it'll probably take a year or two to resolve. But I look at it like this. This company is growing production. Costs are falling. They have those Hig mills, the high intensity grinding mills that are coming in. They can grind ore down to smaller than the width of a hair. Some of the hair that you cut off, it's smaller than that.
I cut off a lot, so I don't know about that.
So they actually are getting higher recoveries. Higher recoveries mean greater production at a lower cost. So my point is the company is doing all the right things. They're firing on all cylinders. They're doing everything right. We're in a bull market for gold and silver. Silver is going to break out again. First Majestic has high leverage. At some point, that tax dispute is going to get resolved. All this is going to happen in the next 1 to 3 years. I think we're going to make a lot of dinero on First Majestic Silver. I really do. So I'm, full disclosure, I own it. I'm very heavily long First Majestic, but I know management. I've been to their assets. This is a great company. They're doing a lot of good things. So just, tuck it in the back of your drawer and ride the train when it starts moving again.
What type of effect, like let's say we get into a full-blown mania in mining stocks at, I don't know at what price that happens at, obviously, but let's say that begins to happen at some point, and so whether silver, you threw out the number $80, whether it's 70, whether it's 100, whatever the number is, but it's breached all-time highs and it's held above 50. It didn't just make it for a day and go back to 20. We've had a sustained attention on the market. Obviously, at that point, you have more funds coming in. There aren't an incredible amount of gold and silver stocks that are on the major exchanges. So whether that's retail investors, whether that's institutions that are just buying off the New York Stock Exchange, the NASDAQ, they aren't buying pink sheets or OTCs. Do you think that, how do you think that would affect First Majestic if we looked ahead at something like that? Does it ultimately, when more and more money flows in, does it get the bid because it's such a respected company and there's not tons that are getting the type of silver exposure that you said from large producers, 52 to 58% of their revenue?
Right. A lot of cash or capital is going to flow into all the stocks, right?
Right.
But the reason First Majestic is probably going to see more is because of that leverage factor. So you have institutional investors out there and they're going to prepare reports to send to their clients. And they're going to say, hey, we can get 25% from company A, leverage to silver, or we can go to First Majestic Silver and get 60%
Got it.
or 70% or whatever it ends up being with a new asset they're going to buy.
Got it.
Let's invest there. So I think more capital is going to come into First Majestic Silver. It has historically, First Majestic Silver did a 10x in about less than 6 months back in 2016. And another thing is the short interest was very high back then. The short interest only went higher over the next few years. This year, it's actually pulled back. It fell dramatically. And that's why you saw a nice pop in the stock earlier this year, right? It fell by over half. But get this, the short interest now is still higher than it was in 2016 when the stock did 10x.
Fascinating. Yeah,
It is fascinating. So I don't want to say, First Majestic is going to be $100 stock or a $50 stock or a $200 stock. I don't know. As a gold Buddha, I would say, hey, take what comes, ride it, and then we'll know when it's time to exit. So,
all right, good deal. So, all right, Mr. Jeff Clark, I want to thank you for coming on today. If you're still listening to this video, we want to thank you for listening all the way through. I hope you learned a lot from this episode. Give us a comment down below. Let us know your number one takeaway. Give us a comment down below. This is Jeff Rules. If you haven't yet, make sure you hit the like button on this video. You can copy and paste it, share it on Twitter, social media, or maybe you got some other friends investing in mining stocks. This will be a great one to refer back to help you through that journey. Many of the big channels pay YouTube to show up at the top of the algorithms. And so if you want to help us compete with that, hitting that good old like button, subscribe, bell notification, and comment down below helps us do that if you think we do a good job. And I want to thank you for coming on.
Great, Jake. Thanks for having me. And if anyone is doubting, some of these scenarios about it, and if you don't know what to think about inflation or deflation, all you got to do is read Mike's book, Mike Maloney's book. It's actually free on the website now. It still shows you the big picture of what is likely ahead and why we're so bullish on gold and silver and why you need it. So if someone's interested, they can download it for free on the goldsilver.com website.
And it's classic, right? Like in the personal development industry, Napoleon Hill's books, Think and Grow Rich, is the classic. In the gold and silver industry, the classic book is the first one I ever read, actually, is Mike Maloney's book. So also link that down below for everyone that wants to check that out. So thanks for joining us, Jeff, and looking forward to reconvening again soon.